Learn the latest blockchain developments and explore investment opportunities in the crypto market. Welcome to the new world of crypto. Today, we're discussing one of the most unique and controversial entities in the crypto world. Unlike Bitcoin, it's not the digital gold of the world, nor is it a haven for decentralized applications like Ethereum. It was born with a single goal: to enter banks and Wall Street, becoming the faster, cheaper new pulse at the heart of traditional finance. Its story is XRP. Its story isn't a geeky saga about a technological revolution, but more like a legal drama filled with lawsuits, fines, and political maneuvering. The protagonists are XRP and its affiliated company, Ripple. The villain is the world's most powerful financial regulator, the U.S. Securities and Exchange Commission, SEC. Today, using this in-depth report from Decrypt as the basis, we'll fully review this 5-year trial of the century and examine how XRP survived the regulatory stranglehold. And when the legal smoke clears and XRP is cleared of its original sin, will it be a future worth betting on for investors or a bygone era? The story begins in 2011. At the time, Bitcoin's anarchist banner was rising, but a group of developers, including Jed McCaleb and David Schwartz, were pondering a completely different question. Could we create a cryptocurrency not to disrupt banks, but to serve them? This idea ultimately gave rise to XRP and its underlying XRP ledger. According to the report, XRP's mission was clear from the outset: to solve one of the most painful aspects of the traditional financial system: cross-border payments. As we all know, sending money from one bank to another across borders typically takes days and incurs high fees. XRP aims to make this process as easy as sending an email, taking only 3 to 5 seconds and costing virtually nothing. It aims to serve as a bridge currency, enabling instant exchange and settlement of various fiat currencies, such as the US dollar, euro, and yen. To achieve this goal, XRP, from its inception, chose two distinctly different paths from Bitcoin, which laid the groundwork for future legal battles. 1. Born rich. Unlike Bitcoin, which takes miners over a decade to mine, the total supply of XRP 100 billion was pre-mined upon its creation in 2012. 2. Prominent origin. From its inception, XRP has been inextricably linked to a for-profit company called Ripple, which holds a significant amount of XRP and promotes its application ecosystem. These two characteristics make XRP an outlier in the decentralized world of cryptocurrencies, and they also gave SEC lawyers a whiff of blood. In December 2020, the sword of Damocles that had hung over XRP for years finally fell. The SEC officially filed a lawsuit against Ripple, accusing it of engaging in an illegal securities offering valued at over $1.3 billion over several years through the sale of XRP. This accusation was a life-or-death blow to XRP. If XRP were ultimately deemed a security, it would be virtually impossible to trade on any major crypto exchange, and its value would be shattered. At the heart of this lawsuit lies a simple question: what exactly is XRP? The SEC's argument was, Ripple Incorporated sold XRP to raise funds for itself, while investors purchased it in the expectation of profiting from your efforts. This fully meets the definition of a security. Ripple's defense was, XRP is a technology, a digital commodity. Its network is decentralized and independently operated. We are merely a participant in it, just as General Electric uses the internet but does not own it. This tug-of-war continued until July 2023, when a federal judge named Annalisa Torres issued a Solomon-like ruling that shocked the entire industry. This ruling cleverly divided the sale of XRP into two parts. 1. Ripple's direct sales of XRP to institutional investors were deemed securities sales. The SEC secured a victory. 2. But more importantly, the purchase and sale of XRP by ordinary retail investors on public exchanges, such as Coinbase, did not constitute securities transactions. Ripple and the entire crypto industry had won a crucial battle. While this ruling wasn't a complete victory, it provided a crucial safeguard for most altcoins. Ultimately, the lawsuit officially concluded in August 2025, with both parties dropping their appeals. Ripple also paid a $125 million fine. With 5 years of legal turmoil finally lifted, XRP's future seemed bright. Most importantly, it opened the front door to Wall Street, a spot ETF. Now that regulators have clarified that retail trading of XRP in the secondary market does not constitute a security, the legal barriers to launching an ETF have largely been cleared. Reports indicate that starting in October 2024, several Wall Street giants, including BlackRock's Bitwise, 21 Shares, and Grayscale, have submitted applications to the SEC for XRP spot ETFs. In addition, XRP futures contracts regulated by the Chicago Mercantile Exchange, CFTC, launched in March 2025, providing institutional investors with a tool to hedge and manage risk. XRP, boasting regulatory clarity and institutional-grade products, seems poised to reclaim the dream it held a decade ago. So, as a sober investor, how should we evaluate XRP after its rebirth? Reasons for a bullish outlook. 1. Unparalleled regulatory clarity. This is its current greatest defensive advantage. While nearly all altcoins are still hesitant about their security status, XRP has already secured a partial pardon. 2. Superior technical performance. This is undeniable. With settlement speeds of 3 to 5 seconds, up to 1,500 transactions per second, and extremely low energy consumption, XRP remains a leader in the industry in terms of technical performance. 3. A strong institutional narrative. The prospect of an ETF offers enormous potential for future funding. However, we must also recognize that behind this seemingly promising prospectus, several key questions remain unanswered. 1. Bankers' money. Are banks actually using it? XRP's core story is to serve banks. But 10 years later, how many world-class banks have actually used the XRP network on a large scale for routine cross-border settlements? It seems few. It's more like a dragon-slaying technique, perfect in theory, but in reality, the dragons, i.e., banks, seem more inclined to develop their own private settlement systems or use regulated stablecoins like USDC. 2. The original sin of centralization remains. Despite the lawsuit, XRP's centralization problem persists. The pre-mining of 100 billion tokens and Ripple's model of regularly releasing XRP from escrow accounts to fund operations make its level of decentralization far different from that of Bitcoin and Ethereum. 3. The dimensionality reduction attack from stablecoins. XRP's core function as a bridge currency is currently facing fierce competition from various fiat-based stablecoins. For a bank, is it more straightforward and less risky to directly use the regulated, dollar-pegged USDC or, in the future, JP Morgan coin, rather than using the volatile XRP as an intermediary? The story of XRP, as described above, is a saga of survival. It entered the arena of battle with the SEC and ultimately emerged bruised and battered. Today, investing in XRP is no longer simply investing in a technology. It's more like investing in a very specific future, a future in which traditional financial giants ultimately abandon their in-house systems and embrace a semi-centralized, public blockchain network as their underlying settlement backbone. This future may or may not come true. The legal process is over, but the market's trial has just begun. The above content is for informational purposes only, not investment advice. Thank you for your attention.